Hey everybody, this is Jason joining you again from Lakeview Mortgage Bankers with another one of our updated podcasts. I'm joined with my coworkers today, Stacy, Zach, and Dylan.
Hi.
What's going on, guys?
How's everyone doing today?
Doing very good.
Great.
Glad to hear. So we wanted to get back to you guys today since our last podcast and go over a few things that we heard. Maybe I guess you can call it some constructive criticism. But some of the words I guess that we threw around as our regular terminology that's familiar to us, that's unfamiliar to some of our listeners.
Yeah.
So what we wanted to do today was each of us was going to grab a word and kind of go over it a little bit and explain it to everyone. So hopefully next time when we use those words, they're a little bit more familiar to everyone.
Yeah, definitely.
Sound good?
Let's do it.
Excellent.
So the word that I'm going to take on today is escrow. And that word basically, when it comes to your mortgage, is involving your payment. And what that means is the part of the escrow is really your taxes and your insurance. Also could be your mortgage insurance as well as flood insurance, which is included in your payment. Now, I say that kind of loosely because it can or cannot be included in your payment depending upon the type of loan that you're doing. So I don't want to get too involved today, but essentially there's two types of loans that we can do, which we'll talk about another time. It's FHA or conventional. With FHA, you have no choice but to escrow. It's not an option. So with FHA, you will be paying your mortgage insurance, your taxes, and your homeowner's insurance all included with your payment. No option. So that escrow is included in that payment. When you're doing a conventional loan, as we know, you have the option to include it or not include it. Okay, so that's the big difference there as far as how the payment is broken down. Flood insurance also is included in your escrow as well. FHA, again, it must be included. And conventional, it's the option to include it or not. So that's the basic breakdown of the word escrow, is how it comes down to the mortgage payment. And again, I know that there's some other things that came up that we'll have to probably talk about another time, and we'll save that for another episode.
Definitely.
All right. Yeah.
Great, good explanation on escrow.
So the word that I'm going to do today is pre-approval. These days, realtors will not take most people out to look at a house unless they have a pre-approval. They want to make sure that you qualify to purchase the home that you're looking at. So what we do, the borrowers give us the needed documents such as W-2 forms, pay stubs, and tax returns. We run their credit. We make sure that between their credit and all that information that they give us, the documents, we can then determine whether or not they will qualify the home of their choice, and if so, then we give them a pre-approval.
Yeah. And I think that's good to touch up on, too, because a lot of people will think they have a pre-approval when they really have a pre-qualification from a different bank where they haven't actually reviewed all their documents. They don't know for sure they're definitely going to qualify.
Right.
They're just going off with the borrower's word. But, like, we always make sure for sure
Exactly.
that we reviewed everything thoroughly. We know they have the income. We know they have the credit. We know they have the assets to close. Like, we do a very thorough job of making sure they're definitely going to qualify.
Yeah, the last thing a borrower wants is to walk into a home, fall in love with it, with a pre-qualification, go to make a offer, and they really don't qualify. That's a waste of time for them and for the seller.
And
of
it
the
makes
house.
us look terrible.
That's why the first step's always a pre-approval. You know,
Yeah.
especially if we have realtors that we work with that we're referring a client to, we're never going to send them a client that's not pre-approved by
Yeah.
us.
Of
course.
Because it's a waste of
Right.
time for everyone, and we don't want them
Exactly.
finding their dream home just to find out that they have to go
Correct.
through the pre-approval process and then that home is gone.
That's why
Exactly.
we do a pre-approval and not a pre-qualification, because we make sure.
And a lot of clients, they don't realize that we're doing that to help them.
Absolutely.
Like, they think that we're being annoying. We ask them for all these documents, but realistically, like you said, we want to save their time. Because
Right.
why do you want to spend all this time looking at houses that you don't even qualify for?
Exactly.
Yeah.
And then in the interim, you can find out maybe you qualify for more than what you thought you could. And then you jump into a different price range of a home.
Yeah, and also if for some reason you can't qualify, you don't qualify for what you want. What separates us again from other banks is we're not just going to shoo you away and tell you to come back next year. We're going to tell you what to do and walk you through the steps to get qualified. You know,
Exactly.
within the next few months to get that home.
Yeah, and Jason, I know a line you said to me when I first started here is going to look for a house when you're not pre-approved is like going to look at colleges if you're not accepted to the college,
Yep.
which that stuck with me too because, I mean, that sums it up perfectly. You're just wasting your time. You
Or
can't
at
get
least to
the
give
house.
you an idea, to set your goals or your sights somewhat realistic. Where if you have an idea of a range somewhat, keep your pricing somewhat where it should be, leveled off where it should be. So like, you can't fall in love with something that you know is completely out of reach.
Yeah.
Yeah.
It just sets yourself up for disappointment.
Yeah, you don't have a 2.4 GPA looking at Harvard.
Exactly. Yeah.
You gotta know what you're doing.
Jason calls it the golden ticket to go shopping.
Yeah.
It's that pre-approval letter.
Yeah, our pre-approval you can take to the bank literally. To the bank.
Exactly.
There you go.
Great. So, so that touches on it. And what I wanted to talk about, my word today, is going to be conforming and those loan limits. Because I know I spoke about the loan limits briefly last week, but I want to go a little bit more into what that word conforming really means. So these loan limits are set each year by the FHFA, and they're mortgages or loans that meet the guidelines of Fannie Mae and Freddie Mac, right? So the benefits of these, like I said, they're better interest rates, which means you're getting a lower monthly payment. You can qualify for a lower down payment, and it's just a much quicker process through underwriting and approval and closing, dealing with a conforming loan rather than a non-conforming loan. Like I said too, the conforming loan limit for 2023 is $726,200. So anything up to that amount is going to be considered a conforming loan. Anything over that, we're going to consider high balance or jumbo, which Zach is going to touch upon as well.
Yeah, and I think it's definitely good with clarifying this because I know last week we spoke about the conforming loan limits increasing and what they were last year compared to this year. But a lot of people listening, they don't even know what that is, conforming loan. So I think it's good we touch on that.
Right.
But yeah, so once you go past those limits that Dylan discussed, that becomes a high balance loan, depending where you are. If you're in a high cost county, such as where we are, New York, where it costs $15 to get a bacon, egg, and cheese, we're in a high cost county. So if you're over $726,200 for 2023, this upcoming year, in between that range and $1,089,300, you're looking at a high balance loan. And when you go above that number, the $1,089,300, you're looking at a jumbo loan, which, as he said, has the higher rates. You can't, for a conforming loan, you could do 3% down. You can't do that anymore once you go into these loan limits. And again, that's up last year. In 2022, above $970,800 would have been a jumbo loan. So now, again, it's up to $1,089,300. So you do have more room in what you could offer on and still be in those limits.
And you know what, to go off of that quickly, what's important for the customers to know is that we, the loan officers, are up to date with these numbers. And the reason being is, let's just say somebody's right on the cusp. They're right there at the edge. And you can ask them, by the way, Mr. and Mrs. Borrower, do you have a few extra funds? Because the difference between being conforming or being a jumbo or high balanced could be night and day for your rate. So if we could take a few extra dollars, maybe from another source that you didn't think you had, from a 401k or retirement fund. And again, it's not like you're throwing it or gambling the money. You're putting it into the purchase of your home. So it's just knocking down the balance a little bit more. But let's just say it may only be a few $1,000s. And again, we're not trying to spend people's money, but if it's something reasonable and manageable, maybe us having the knowledge to know that we can put them over that little hump by a few extra dollars to change their loan structure makes all the difference.
Yeah, it's going to save them more money down the line also.
Right.
Because again, it's not based off the purchase price. It's based off the loan amount. So you could always put more down to offset that.
Yeah.
And the loan limits vary, like you said, by the areas and by states. So whatever state you're in, inquire with us and we'll break down those loan limits with you.
So if you're above that limit, the $726,200, depending where you are, that could be a jumbo above that number. If you're somewhere in the middle of Kansas, wherever it is, and you're not in a high-cost county, anything above $726,200 will be a jumbo. And also, like you just said, Jason, how they could put down a couple extra thousand, whatever it is, to get them under those limits. A lot of people don't realize, they hear that they say, I don't want to put more money down, but you're not really spending money when you're putting it down because you're buying more equity into the house.
Correct.
Exactly.
So instead of spending money, you're kind of taking money from one pocket and putting it into the other.
It's an investment.
Yeah.
Correct. Into your future. Absolutely.
Yeah. So I know also, we have the holidays coming up, so borrowers are going to be shopping for those holiday gifts. A lot of money is going to be spent. So I know, Jason, you ran into something recently that you wanted to touch upon as well, right?
Yeah, something that we wanted to talk about, which is why we like to do these podcasts, is to keep everybody in tune with changes and updates. And something that's kind of happened, I mean, it's been around for a little while, but something that we've just recently seen. One of our borrowers had to prove their Social Security deposits. So to do that, they had to show their bank statements. When the underwriters took a look at their bank statements, they saw this repetitive debit that was coming out to this company, and they were obviously going to question it. What this company was these companies now have where you can basically buy now and pay later. Not to mention the names of them, there's different companies that do it. So this particular company's name showed up several times on this woman's bank statement. So of course, like I said, the underwriter wanted to know, what is this? Because if it's a repetitive debt, now it has to get calculated into our budget.
Yeah, of course.
If a lot of these cases are very simple, it could put that budget now from being approved to not being approved. So the bottom line of what the story is it's important when we're talking to our clients to make sure that they are truthful to us. There's nothing that they really should be hiding from us. And this borrower really wasn't hiding. She just didn't think it was a big deal. She bought a few items and she was paying it off. it's not on her credit report. So in her eyes, what is she doing, right? I don't need to tell you guys because you ran my credit report. So if it's not there, and again, when she talked to me about it, she says, I wasn't trying to hide it. She just didn't know she had to tell me about it.
Yeah.
So I understand that because, again, they don't get it. That's what we're trying to explain to our borrowers when we talk to them, or even talking to realtors or whoever it is when you're getting clients. Lay it all out there for us.
Yeah.
Let us know everything. So something like this, fortunately, in this circumstance, didn't hurt the deal because she had enough room where we had to take on the payment, and it didn't hurt us. But let's just say that it was thousands of dollars and it was $100 or so of a payment. That could easily, as we know, take our debt to income from good to bad, just like that.
Exactly.
You know, and that's a killer, especially when it happens at the end when it's like this, which is a surprise. So
Yeah.
we also want to bring it up now because it's the holiday time. So we know people are shopping, people are out buying gifts. So again, if you are doing something like that, not to say don't do it and have a
Talk to us
Scrooge
first,
Christmas.
yeah.
Don't buy anything
Yeah.
for the holidays, for whatever it may be. But just tell us.
Yeah.
Let your loan
Yeah.
officer
Consult
know.
with the loan
By the
officer.
way, I have a $100 payment to whoever it may be, and if we can see also that it's a short time, the term is not bad because this is installments. We may be able to eliminate it altogether, but we still have to disclose it rather than it come out later and be a surprise. That's the most important thing.
100%.
Underwriters and us as loan officers don't like those types of surprises.
Another thing that we need to let our borrowers know is when you purchase a home or you're in the process of purchasing it, before you go to closing, it's very exciting. You cannot open a credit card and buy furniture. That could kill the deal. You need to really be cautious about, opening up new credit cards, especially this time of year where you go into a store and it's exciting and they say, oh, you'll get an extra percentage if you want to open up another credit card. Do not do it.
Yeah, or if you do want to do it, speak to your loan officer first and make sure you have room to do that. Because even a few dollars can put your debt to income ratios over where it needs to be, and it can kill the whole deal for you.
Right.
Right, we
Exactly.
talked about it last time about this. Another word that people may not be familiar with,
Debt
which
to
is a
income.
soft pull.
Okay, that is
And a
what it
soft
is.
pull again
that's true.
is when we, as a lender, run credit for you, the borrower, but it doesn't come up as an inquiry, which again is another word everybody likes to always ask us. Does it come up as a hard inquiry, which means someone has checked your credit? A soft pull means somebody's pulling it, but we've seen it, but you don't actually see that we've seen it. So it's not coming up as an inquiry. But the purpose of that is just for like what Stacy said. We check the borrowers right before closing to make sure that there's no new debt added. Because if there is, sometimes that debt can be killer.
Put you
Which
right over.
we know
yeah.
happens quite often.
It
Right.
unfortunately does.
Yeah.
Somebody went out and bought a car. Somebody, most importantly, now they know they're getting a new home. What do you have to do with the new home?
Furniture.
Exactly.
gotta furnish it, yeah, and you're gonna wanna decorate
wait
it,
until
so-
after closing.
Exactly.
The most important thing. So again, these are experiences that we've learned over time and hundreds of loans through all of us here that we share. And we're laughing about them now, but there was a time when we were probably crying.
Yeah, and we always say we'll laugh
Yesterday.
about this later on. But
It could have been. It could have been this morning. It could have been this morning.
Yeah. So something we're excited to hear about Lakeview, besides Judge resigning with the Yankees, which we're very
Yes.
excited about,
That's right.
is we have our holiday party coming up next week. That I know we're all looking forward to.
Certainly are.
And we'd like to invite all people that we do business with, attorneys, real estate agents, just as a token of appreciation for everything they've done for us and everything they're going to continue doing for us.
yeah, and we do this holiday party every year, and we're still going hard because, like we said, a lot of people now are starting to slow down, but that's not what we do here. We keep everything
No.
going. We fly our realtors from out of state in, attorneys, title companies, anyone we do business with, and we're going to have them on the podcast as well and get insights from them too. But it's just to show that, we keep relationships going with all the business professionals that we work with.
Even in the times right now, which are tough for
Exactly.
a lot of people, which
Yeah.
we've even heard from the place where we're having our party and from other people who normally come who say, well, we've got to check the calendar. The calendars are a little bit less crowded this year because a lot of people aren't having the get-togethers or the gatherings or like us. We don't have either of them. We have an extravaganza.
Yeah,
Yeah.
it's a blast. It's a bang.
So that's what we're looking forward to. And I'm glad you brought that up because, again, it shows that we're still doing things and
Right.
we're productive here.
We're still expanding.
Yep,
So-
always.
Never
And
going to
it's
stop.
also a way of saying thanks, like you said before. to
Yeah,
thanks
100%.
to everybody that we do business with. And
Yeah, it's good. It's a good way to start the new year off also. We all have a great time together. Everyone that we do business with and stress with throughout the year, we get to have a drink with them and just
Exactly.
relax
Get
for a
to
little
see
bit.
the other side.
Yeah.
Get to
We
see
see
the
the
other
other
side.
side of everyone. Yeah. See everyone get a little loosened up. So
That's right.
definitely, we're excited for that. And like I said, we're going to have them on the podcast, realtors, whoever's coming in from out of state as well, to get their insights on the business right now.
Yeah, and actually, speaking of that, since our last one, when we know we had Steve from our other office come on, our calendar and our schedule is getting a little full. So we know we're going to have some new guests coming on in the future. So we're going to probably be looking forward to that coming up next year. We're going to be doing this now, I think, weekly.
Yeah.
Right?
Yeah, definitely.
So I think that's pretty much
This
what
is
we
just
got.
the start. We're going to keep them coming. A lot of more, new information and topics that we're going to talk about. And any questions you guys have, things you don't understand, like we said, we like constructive criticism. This is on YouTube.
Right.
Put it in the comments, comment on
Yeah.
our Instagram, and we'll definitely touch base on those topics right away.
If there's
Yeah.
something that you guys want to know in detail, words like he just said, definitely reach out. We'd be more than happy to go into it.
Yep.
Yeah, we could even start a new segment every week. We can
Whatever
answer
you
a
guys
fan
want.
question.
We're
or
here for you.
Any
You're
questions
part of the
anybody may
audience,
have, yeah.
Yeah, I think we'll even be able to take in some, call-ins and some questions in the future. We're going to
That's
try
a
to
good
set that
idea,
up
too.
as well.
Done.
I mean, that's the
100%.
point of the podcast, right? To educate everyone. So
Exactly.
anything you don't understand or you just want to touch up on it a little more, we can clarify for you.
No doubt.
Yep.
Well, thanks again, everybody, for joining us today. We look
Thank you.
forward to seeing you next time. And again, keep those questions coming. And then again, anything you have, questions, concerns, whatever you may have, bring them on. We're here
Yep,
for you.
We're ready for it. Happy holidays, and we'll see you next year.
Thanks, guys. Happy holidays.
Take care.